Welcome back, YouTube. My name is David Mitchell and I am the host of the Ace of Spades. Today I'm going to be covering the stock Groupon. Recently in the last few months, it went from 50 cents to around $30 today. In this video, I'm going to cover why that happened and whether or not it's a buy. Coming up. I started trading Groupon when I started buying in Groupon between 50 cents and 80 cents, and I would trade at around $1.12, $1.18, and this was a few months ago. But recently Groupon went from around $1 per share up to a little over $30, and they achieved this by doing something called a reverse split. Now, a reverse split is pretty much where you compile the total amount of stocks to not temporarily, but you increase the value of the overall buy-in to get into the stock. So Groupon did a 20-to-1 split, which means for every 20 stocks you own, they compiled it into one. Now, most people will say that's just some fancy accounting, and it really is. A company will do something like this for a couple of reasons, but I'm going to cover the most popular. The most popular reason is that stock is usually trading at $1 in the dollar range or a little below, and the SEC will actually delist you if the stock doesn't meet those requirements, or it doesn't start trading above $1 within like a certain time frame. So I'm sure the leaders at Groupon were thinking ahead and jumped in front of the ball by compiling the stocks and increasing the overall value. This also makes it more attractive to investors that's going to invest for the long haul. So is Groupon a buy? So Groupon just released that it lost around $213 million this first quarter compared to $42 million of the first quarter of 2019. But it did finish the quarter with over $600 million in cash, including around $150 million that it borrowed. They're also hoping to save around $100 million this year from the layoffs and the furloughs that they did earlier on in the year. So with that being said, not much has changed. If you owned the stock previously, you didn't make any money, but you didn't lose any either. And as far as with the economy, as far as a natural rise to the stock market, I'd say Groupon would probably be on the tail end of that, since it's more so catered to like events as far as going out and actually being out like around people. And part of the suggestions for dealing with the coronavirus is actually social distancing. So I believe that's one of the reasons why Groupon was hit so hard. Groupon does still have a lot of cash on hand, so I do believe that Groupon is in a great enough shape to survive. I just would suggest as far as investing for the long haul, because with the increased value of the stock being currently at around $30 per share, that's going to decrease the volatility of the stock. Because a lot of the day traders, they're usually going to trade within those, like especially if you're below $1 per share up to around 10, you're going to see a lot of high volatility now. This is actually going to slow down a lot of the volatility that we've seen with stocks such as Groupon that we've seen in the past. And with that being said, in my opinion, I would still consider Groupon a buy, but it would definitely have to be over the course of the next few months if you're thinking about turning a profit. I would not trade this stock right now. If you currently own Groupon, or if you had Groupon prior to the consolidation, let me know in the comments what your plan for it. Are you looking to trade, or have you made good money with Groupon? Are you trading it in the future? Let me know in the comments. And as always, if you received any value from this, please consider subscribing. Leave me a comment. It helps the channel grow. It definitely helps the YouTube algorithm. I post several times a week, so if you'd like to hear more from me, that's definitely how we'll stay in touch with each other. Thank you, happy investing, and until next time.